and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends, and most importantly, we'll be answering your queries during the show. So please keep those comments coming on our feed. Let's kickstart the show with taking a look at the global handover. Stocks in the Asia Pacific trade lower in the first trading day of the year. The SGX Nifty also is signaling a weak start for the Indian market. Remember, yesterday most Western markets were shut, so this is all the cues that we're working with this morning. For our own market, is metals the next big theme to invest in? We find out on the show. Also in the spotlight will be Zomato, M&M Financial, South Indian Bank and Hindustan Zinc. All right, let's get going with our first guest to talk technicals. We have Abhishek Jain from 5paisa.com. Morning, Ruchit, and thanks for joining us. Happy New Year to you from all of us at Moneycontrol.
Hi, very good morning, Karunya. Wish you and all your viewers to a very happy New Year, and we hope that in spite of that volatile 2022, at least 2023 would turn out to be a good one.
Absolutely, and we did start the first trading day of 2023 on a positive note. Today, of course, the cues are looking a tad weak. But let's talk about the setup for the month overall. How's January looking? Because typically, if we look at the historical trends, Nifty has, on an average, ended marginally in the negative. So can that January jinx be broken this time around? What is your assessment telling you?
So I think the way data is shaped up, we are expecting this January month to be more of a range bound on the index front. Primarily, if you look at December series, then the second half of December series, especially, we saw some short formations by FIs. And whenever we see short formations by FI in the index futures, the index generally takes that as a negative sign. And hence, we saw that about 1,000-point correction from that all-time high of 18,880, which we made on the 1st of December. Now, the start of January series is not that optimistic according to the data, because if you look at the same FIS data, they rolled over some of their long positions, where on the first trading session, their long-short ratio was about 57%, but they have formed some short positions again, and that ratio has declined again below 50%. So below 50% means there are more short positions in the system in the index futures segment. I think that's where the markets, the upside would be limited in the markets on pullback moves. But if you look at technicals, then the rising trendline support, and as per the options data, the highest open interest is coming around 18,000, which would be important support for the market immediately, and 18,300 on the higher side would be the immediate resistance. So as of now, we are expecting this range to play out, at least in the initial first half of the series. 18,000 to 18,300 market would consolidate within this range. And since we are approaching the budget at early next month, so more of a stock-specific or thematic moves would continue to provide better opportunities than the index. So on the index front, 18,000 to 18,300 is the range that we are watching for. Any breakout from this range would give us more clarity of the next directional move for the month. But yes, stock-specific opportunities I think should be seen, should be found on for trading perspective, where some short-term gains could be made.
Okay, all right, makes sense. I want to flag off some individual stocks as well that could be in the limelight today. First name, of course, is going to be Zomato. Yesterday, we heard of the news that the co-founder and chief technical officer of the company, Gunjan Patidar, has resigned. In fact, remember, he was one of the first few members of, or rather first few employees of Zomato. He built core tech systems for the company, and now that he's on his way out, it just adds to the host of senior management exits that have taken place at Zomato in the last 1 year. Talk to us about Zomato. I mean, I'm sure this is something that could once again hurt the investor sentiment, given that one of their core members is leaving the company. Talk to us about how the technicals are likely to play out. We have limited historic trend, of course, to work with. But if there's any way that you could guide us and our viewers.
So I think if you look at the stock, definitely post-listing, we have already seen a significant correction. And at lower levels around that 52 marks, some buying interest was seen a few months back. But whenever we are witnessing that pullback moves or up moves, we are not witnessing any follow buying or sustainable up moves which are seen. So the volatility continues to be there in the stock, and based on such news which comes on coming, some negative news comes on, after some intervals. I think the confidence in the stock is not getting built up. So which can clearly be seen by the formation where we have not witnessed any kind of significant high top, high bottom structure. So I think the stock would continue to trade under pressure. But on the downside, 50-54 range is where last time we witnessed some buying interest by market participants. So in case if the stock comes around that 50 or 54 range, I think ideally the downside would be limited around there. But certainly the volatility within this entire 20-25 rupees range which we have seen since last 3 or 4 months, that is likely to continue going ahead.
All right. Okay. I want to flag off two names from the banking space as well, Mahindra and Mahindra Financial Services as well as South Indian Bank. Now, both of them have given out their Q3 update. Mahindra has reported an 80% year-on-year growth in disbursements, coming in at 14,450 crores. Collection efficiency has come in at 98% for December and 95% for the entire quarter, which ended on December. That is Q3 of FY23. At the same time, you have South Indian Bank as well, which has clocked 18% YOY growth in gross advances. Deposit has grown by 3%. CASA ratio has improved to 33.84% versus 31.95% in the same quarter last year. Both of them from the financial space, both of them from the broader markets, mid-cap names. Talk to us about, one after the other, or if you want to tell us how they stack up against one another. Either way.
I think as within the NBFC space, M&M Finance no doubt has the trend for the stock has been positive. We have seen that in spite of volatility, the stock has managed to hold above its support range of 170 to 180 when in the recent correction. And post that, the buying interest has been witnessed with very good volume. So whenever the prices are going up, the volumes are good. On corrections, the volumes are low. Even the weekly and the monthly chart, a bit mid to long term chart formations are quite positive for M&M Financial. So I think over a period of time, if one can have a patience of about next 8 to 12 months, then the stock could provide good returns and it could head higher towards 290, 300 marks in next 1 year period. So overall trend is positive for Mahindra and Mahindra Financial. Buy and dip strategy should be kept in the stock whenever intermediate declines comes, or at lower levels one should look for buying opportunities and existing positions should be held on. South Indian Bank has been volatile. The worst seems to be over for the stock. We have seen a huge, long phase of underperformance within the banking space from the stock. But recently, when most of the mid-sized banking stocks have witnessed a good momentum in last 3 or 4 months, even South Indian banks have seen a good price volume action. So I think the worst seems to be over price-wise. There could be some time-wise correction again in the stock in next 1 or 2 months, considering that the stock has already seen a good run-up in percentage terms in last 2 or 3 months. But overall, the structure is still good, and one can expect levels around 24 to 27 in over next few months. So the structure is positive for South Indian Bank. I won't advise fresh buying over here, but in case if existing long positions are there, then I think they can continue to hold on from a medium-term perspective.
Okay, all right. In fact, we're getting a lot of comments on some more private sector lenders from the mid-cap space. Saurabh was asking us about Karnataka Bank. I have a comment on my screen from Vashni. They're asking about IDFC First. There's one comment on Yes Bank. Any of these names stand out for you in terms of their technicals?
I think IDFC First and Karnataka Bank, the technical structure for both these stocks are quite positive. We have witnessed a good volumes along with the price up move in both the stocks. I think Karnataka Bank overall, it seems that the stock could head higher towards 175, 176 mark in the short term. Whereas even IDFC First Bank, whenever we are witnessing some price-wise correction at lower levels, again some buying interest has been witnessed in the stock. So 67 to 68 target projections are seen technically as per reciprocal retracements there is for IDFC First Bank. So these are the two stocks. In case the overall banking and financial space does well, then we can expect some relative outperformance from these two names.
Okay, all right. I want to also flag off the Q3 update from another company. Now, this one's from the metal space, Hindustan Zinc. Q3 mined metal production increased 1%, driven by higher iron ore production. Refined metal production at 257 KT has fallen 2% YOY, but sequentially it's seen a 5% growth with better plant and mined metal availability. How's Hind Zinc looking? And in fact, overall metal index, yesterday it was on fire, and last week also we saw some momentum building up. Lot of comments, lot of interest coming in for metal space, metal index, and individual names. So overall, what is your assessment of the index, and if some names you want to flag off?
So the metal stocks mostly have inverse correlation with the dollar index. Whenever we see a sharp rise in dollar index, these stocks tend to underperform and show some price-wise corrections as well. And but whenever we see some corrections in dollar index, then metals are generally does well. So of late, we have seen that the dollar index has continued to remain under pressure, and we have not seen any significant up move or upticks in spite of recent corrective phase. So till until we see any kind of resumption of the uptrend in the dollar index, I think the metals will keep continue to deliver positive returns in the short term. So overall biasness remains positive. Even Nifty Metal Index after that small correction around its 200-day EMA, the index has again resumed its uptrend. And most of the, especially the steel names are there, which are witnessing good price volume action. So overall, the trend for the metals in the short term remains positive. One should keep a close tab on the dollar index as well until we see any sharp spike over there. I think the biasness would continue to remain positive in metals. And coming on to Hind Zinc specifically, the stock has relatively done well in last few trading sessions along with the other metal names. And the previous swing high resistances are indicating possible targets around 350, 360 in the short term. So I think the stock has potential to go further 8 to 10% upside in the near term.
Okay, all right. In fact, I want to touch base with Abhishek Jain from Arihant Capital to discuss the metal space in detail. Abhishek, good morning and thanks for joining in. Yesterday, we saw the Nifty Metal Index make a new high. Most of the heavyweight stocks were also on fire. Talk to us about the demand prospects as we see right now, how they could play out in 2023, because there are still macro concerns when it comes to demand from US, from UK. Can China and India demand alone offset the fall or the weakening demand in other parts of the country or of the world?
So, ma'am, when we see on the metal side right now, so I'm just giving an example of HRC prices right now, which is a key indicator, right? The stock seems to, the metal prices or this HRC prices seems to be a bottom out right now. Even on the other metal commodities also, we are seeing very good traction. Like we are seeing the monthly numbers or quarterly prices update on the global metal companies. They are being given a benign positive outlook, which were earlier giving benign outlook earlier. So the outlook the outlook is changing. We think metal prices have been bottoming out. On the Europe side also, when we are interacting with some of the metal user consumption, they are talking about things are improving on month-on-month basis. We have seen healthy US retail sales number also, like some of the data has been quite heartening. I'm expecting this data to be much better right now. If Europe started picking up, we are going to see substantial upside in the metal prices from these level also. However, the market have seen a certain rally in some of the steel or some of the metal counters. We have seen 15% rallies in some of the large caps like let's say Tata Steel or JSW or some of the plays right now.
Right.
But on overall side, the outlook remain positive. Things expecting even on the domestic demand side also, when we are talking to channel checks via dealers and other participants, the outlook is much more positive. Even on some of the companies we are in, like auto ancillary, which are the ultimate user for the metal product, they are talking about much better Q4 than and Q3. December side was very strong for even for the housing construction side also.
So would it be correct to say that the worst margin quarter for steel space, whether it's the likes of Tata Steel, JSW, and even some of the smaller players, is the worst behind?
We can say in current scenario, we can definitely say that the worst is over.
Okay.
But it will take metal prices. You are not going to see a substantial hike because we haven't seen rallies like in the metal side right now on the global side. I think one can look some of the metal ancillaries also, like something called graphite prices are expected to improve, and with EV started picking up. So some of the metal like HEGs and graphites of the world, which are linked with the steel production, should do very well. So I think the bottom is done, but it will take its own slow process. It's not going to be like you're going to see a run away. But next 1-2 months, I believe at least next 2 months, the outlook is very positive.
Okay, that's an interesting way to play metal uptick, metal ancillary stocks is something that one can look at. All right, but what about valuations? How are they stacking up, especially for some of the Nifty 50 or the heavyweight metal stocks, whether it's Tata Steel, Hindalco, JSPL, JSW? How are they all stacking up, and which are the ones which look most attractive and most promising from a valuation and from an earnings visibility standpoint?
So earning visibility side, one can definitely have a look at Tata Steel is something which we like. We believe Europe also, once they'll be opening up right now, we'll see the demand to be picking up. And Tata Steel, if you see on the valuation side, is not relatively, it's much cheaper on FY24 number, it's some 7 or 8 times right now. I think Tata Steel is something which we are been advising our investors to add. Some of the companies in the metal, it's like some of the pipe sectors are there right now, where there were inventory losses. So some of the inventory losses will be reversed. So some of the companies are there right now in the metal side. JSL is there, one company which we think is should do very well because the government has recently come out with the anti-dumping duty also, and that is triggered very well. Jindal Stainless Limited, JSL and JSL here, and they have changed their business transaction also. So if even if the nickel issues are there right now, on the image saw in it's not going to impact it right now. JSPL should do very well. And when we see next 3 to 6 months, expecting because last year the volumes are severely impacted by the export duties which were put in the industry right now. So you are going to see second half will be the lower base for most of the metal exports player right now. So JSPL is definitely a buy on decline, not at current price, but expecting a strong numbers because there has been a pickup on the volume side also. And Q4, if you see, last year was a relatively soft quarter, largely, especially on the domestic side, because of some COVID impact was there.
Okay, all right. And would you say, I mean, I know you flagged off that for the next 1 or 2 quarters, metals look fairly resilient and fairly promising. But would you say from a long-term investment standpoint, it's the right time to dive in?
I would say you can put 50% of your whatever desired investments are there right now. Put 50%, and then if you get in a correction in the markets right now, then you can have a look at those sectors because one need to understand metals are highly sensitive to the global recovery. What we are seeing in the recovery side right now, it's very positive side right now. People are talking about, despite all the talks of recession, we are getting very good data largely on the domestic side also and the global side also. Expecting this data to remain positive at least for next 6 to 9 months. We need to understand, like in Europe, there was a complete destruction in demand for the first half of last year right now. Despite all this, there was a price hike, so people stopped consumption. Maybe on the value wise, you may not see, but volumes, we are very quite positive on the volumes will start picking up right now.
Okay.
And on relative side, on the margins is going to be much better because last year you've seen raw material prices also moving up.
Okay.
So even now the RM prices are moving up, but relatively it's much more benign than what it was last year.
All right, Abhishek, thank you so much for joining in and for talking to us about the trend, and Happy New Year to you as well from all of us at Moneycontrol. Okay, quickly addressing some of your queries and comments as well with Ruchit, who's standing by. Ruchit, if you could talk to us first up about Hikal. Satya is writing to us. They bought at 380 levels and wants to know what the strategy should be going forward. They've made some money here. Clearly, the stock has seen a good uptake last, 8 to 10 days. Should they book profit right now, or do you think it could rise further?
And it's better to ride this trend. No, after a long consolidation, the stock has recently given a breakout about that 350, 360 mark. And if you look at last few days, then the volumes are post the breakout are quite good. And usually whenever we see such good volumes in the mid-cap names after the breakout, such stocks tend to do good way in the short term. So on the higher side, one can expect target somewhere around 430, 440 in the near term, which would be about 8 to 10% higher upside from current levels. So continue to hold on with stock below 360 for potential target around 440, where you can review and to book profits over there.
Okay, all right. Divya is asking us about Amber Enterprises. How's Amber looking, if you could tell us?
So a lot of underperformance has been seen over last few months in this stock. The entire uptrend that we have seen about a couple of years ago, I think it has been retracing that uptrend. And on the lower side, the major support for the stock, technically on mid-term, mid to long-term charts is coming around 1650, 1700, which is quite low from current levels as well. So I think unless we see any signs of reversals, better to avoid the stock. Maybe around 1700 could be a good time to again take a review whether one should buy it for the portfolio or not.
Okay. Very quickly then, moving to IHCL. Debashish Das has bought IHCL at 311. Wants to know what is your advice for this investment going ahead?
So which for a long-term perspective then continue to hold on. In the short term, I think more of a time-wise correction could be seen since the stock has been trading within the channel and we are not witnessing any significant momentum on the short-term charts. So it's just a short-term time-wise correction which can be expected over next maybe 1 or 2 months. One should not expect any significant moves in the stock. But yes, at least 6 months perspective, if it is there, then I think the stock would continue to trade higher once this time-wise correction is over. So continue to hold on, but from a medium perspective.
Okay, all right. Well, we're extremely pressed on time. So, Ruchit, why don't you dive right in and tell us what are your preferred picks in the market right now?
Yeah, so a couple of buy recommendations as we talked at the start of the show that it's going to be more of a stock specific approach which traders should take. So my first buy call would be a buy in Petronet. A long consolidation has been seen. About last 3 years, the stock has been consolidating within a range. But no, of late, we have started witnessing a high top, high bottom structure on the lower time frame charts. And in yesterday's trading session, if you see, the stock retraced about 50% of the previous up move from where some buying interest was seen, and especially the second half volumes were quite good. In last 1.5 hours yesterday. So we are expecting a breakout in the stock, considering the technical parameters. One can go long at current levels with stop loss below 212 for initial targets around 226, 227. And my second pick again would be from the metals names. We have talked in detail about the metals, which are likely to continue to do good in the near term. And Tinplate is one name which technically has given a breakout yesterday. So a falling trendline breakout is there. Good volumes recently indicates a good buying interest in this stock. So the mid cap metals are likely to show some good momentum or catch up move in the near term. So Tinplate could be bought with stop loss below 335. Two targets would be there. First target would be 364, and once it crosses 364, 378 would be the target which one can expect.
Okay, so a buy on Petronet and Tinplate. Thanks much, Ruchit, for joining in with your insights on the market and individual stocks. Guys, thank you so much for sending us so many queries and comments. Unfortunately, that's all the time we have. So come back tomorrow and we'll address your queries then, perhaps. But for now, it's a wrap on Morning Trade. Thank you for watching.